Focus on a couple of stocks then, and Mastek. That one's gaining ground in today's trading session. This after the board approved a deal to buy Trans-American Information Services, as well as a couple of other entities via their subsidiary. We're currently joined by Mr. Sudhakar Ram, the Vice Chairman and MD of Mastek, who joins us on the phone line. Hi, Mr. Ram. Thanks so much, sir, for joining in. A couple of acquisitions you've made. One is via your subsidiary, one as well is domestically. Could you tell us what is the total acquisition cost of these subsidiaries?
Yeah, so this is a company called Mastek that we have acquired in the U.S.
Okay.
And that company had an Indian subsidiary which was doing offshore work. And the focus of this company is in the e-commerce space,
Right.
which is in line with Mastek's own thrust in the area of digital transformation.
Correct.
So when we had to buy the entity, there are many individual legal entities, but all of them operate as a single group. So the Mastek's US subsidiary is called Digility, and that has acquired the principal, which is Mastek in the US, and Mastek Limited, which is the offshore arm, has acquired the offshore arm of Mastek. So that's how this whole deal is structured. Total consideration is about $25 million.
Okay, so that would be roughly about, say, 170 odd crores, right?
That's correct.
So you have about, say, a little shy of 140 crores on your books already. How will the balance be funded?
So we've gone in for bank funding to fund the balance, and while the consideration is $25 million, it's not all paid upfront. Obviously, you know, it's a combination of an upfront payment and earnouts.
Okay.
So part of the upfront payment is actually funded through debt.
Okay.
And that's something that Mastek, as the principal, is also facilitated and guaranteed.
All right, Mr. Ram, just to get that right then, how much is the upfront payment? You said part of it will be funded by debt, and also it's going to be roughly around 50 crore debt is what you're looking at. Am I getting those numbers right?
No, more than that. I think we're looking at a debt around the 10 million range.
All right, 10 million range.
Yeah,
all right,
yeah,
and so so after this, so you're not utilizing all the cash that you have, because the last number that we have is around 135 to around 140 crores. So you're keeping some cash in your coffers.
Obviously, yeah.
All right, just to understand, sir, so it's going to be a mix of debt as well as of your internal accruals. This acquisition is around 170 crores. What kind of revenue potential do we expect coming in from here?
This company did more than 27 million last year.
Okay.
And it's expected to grow. It will be, I mean, obviously, financial year will end in March. So I think we will be around the 30 million mark in March.
Okay, and you also said that these deals are margin accretive, is it?
That's right.
Okay, so how much are you expecting for them to add on?
We can't exactly share those figures, but it will be, overall, the deal will make us better in terms of EBITDA. So.
All right, Mr. Ram, so you're sounding quite confident. This deal is looking quite good. And if I just try to do a rough working, 25 to around 30 million, we're talking about more than 200, 220 crores, more than that, in fact. Your last year revenue was around 530 crores. So you're telling me that your revenue is maybe in the next couple of years will go up by a smooth 40% or so?
Yes, I think it should, combining the growth, organic growth of the company, and we expect this company to synergize well with our rest of our operations.
Okay.
Like it has a high retail focus, and we do a lot of retail in the UK.
Right.
So the expertise that these guys bring in Oracle e-commerce suite is something we can leverage in the UK.
Okay.
And our data warehousing expertise in retail, which we have actually exemplified for people like Morrison, can be leveraged in their customer base in the US.
Okay.
So this is I mean, I've always been saying US, we need to start with an acquisition because organically to start from scratch is difficult. So this is a nice addition to kickstart our US business.
Well, Mr. Ram, you know, the stock is screaming away as you speak, because I think the street likes what you're saying. So let's just to get a couple of details, sir. You'll be around a 750 to around 800 crore company. In the next couple of years, you'll have a debt of around $10 million approximately. Just want to understand what kind of margins can we look at? I mean, some kind of range, because we want to just do a back of an envelope calculation on that 750 to 800.
We have been targeting the mid-teens in terms of our own margins, and this should facilitate that whole thing. So.
All right. So we can look at an EBITDA number of roughly around, maybe around closer towards 100 crores or thereabouts?
Yeah, somewhere in that, yeah.
Wow.
Yeah, yeah.
All right, Mr. Ram, we'll leave it at that, sir. Thanks very much for joining in. So that's the word coming in from Mastek, new acquisition.